of money, and it'll depend a little bit. Some of the Middle Eastern sovereign wealth funds are now finding themselves a little bit more constrained than they were, and so maybe a little more interested in liquidity, less interested in taking the longer time frames, and that will vary from institution to institution.
And if I can, I think all of these types of asset holders labor under the same challenge, which is the diseconomies of scale. They're all so big, they have so much money under management that they're only looking for very big, very tangible things to invest in, which sort of has this insidious effect of crowding out other forms of capital. And then, no surprise, every single deal that we underwrite is an infrastructure project, an energy project, an extractive project. I mean, ironically, corporate capital is becoming a more benign, if I could use the term, form of capital in many fragile states, because a lot of these companies effectively are prepared to own. There's no agency issue. They're not outsourcing to a fund or a fund manager the consequences of their capital. So a lot of corporations are starting to fill that void. And that void, I think, is the piece of the puzzle that is one of the root causes of a lot of the volatility. And, road work doesn't hire people permanently. It just creates work. In the short haul, it might improve overall economic conditions in a country, as would an energy investment. But I think until we really find a way of getting capital in that middle market and then further downstream that sort of generates improvements in people's quality of life and addresses income inequality and all these root cause issues, more infrastructure and more energy investments in fragile states will not necessarily change the needle as fast as we need to change the story on their development.
Great. Well, I want to be able to get to some questions that have come from the audience. So I'm going to consolidate a few of the questions we have prepared and talk about just from a private sector, from a sector perspective. If we're looking at frontier, greenfield sectors where risks are deemed higher, we want to focus on climate. We want to focus on healthcare systems, for example. How can the risks in sectors which might, cross country boundaries, how do we address this in the various countries? And also, where do guarantees come in? Would guarantees, another form of insurance, would guarantees allow us to scale up the type of investments and the amount of investments we're able to do in these types of sectors?
Yeah. I think, the guarantee mechanism is one of the most underutilized mechanisms, especially when it comes to not crowding out capital. And I think that one of the big concerns people have is default risk. And, to leverage guarantees, for example, to support the ecosystem of entrepreneurial hubs that you're starting to see pop up all over the world. The hubs themselves could serve as sort of a proxy for what we have seen in the lessons of microfinance, that where there is this kind of corporate sort of environment, people are less likely to default. And perhaps a guarantee mechanism could support that. I mean, the main thing is, for those of us in the risk business, we cannot aspire to remove every risk from every investment or transaction.
Because then you
number one,
earn the risk-free rate.
Right. Well, number one, then what fun is there in that? And number two, you get rid of the animal spirits that is supposed to drive these ventures in the first place. But I think there are very promising opportunities in sectors across the world, and especially in many fragile states. I think logistics is one in which you could argue to overcome the lack of infrastructure and to overcome the lack of paved roadworks. Logistics firms and the potential to Uberize, if you will, getting goods, whether they're business goods or if it's just movement of people. I think that's an enormous opportunity across the world, and the advent of the technology and the adoption of these mobile phones, which are ubiquitous in so many of these countries, really has the enabling fabric for these types of business models. And the good news is the product that you would invest in doesn't get stuck in customs, right? So the friction of having to trade with many fragile economies more or less goes away, but it's not one of those big tangible investments that you have to cut ribbons to inaugurate a new power plant. But I think those types of opportunities are native all over the world, and they should attract much more capital than they tend to.